California is selling $2 billion of bonds this week. It's its first issue since the month of November. But the question is, who's buying? What will demand be for the state with the lowest credit rating among all the U.S. states? Paul Brennan is one of the leading municipal bond firms in the country, Nuveen Asset Management. He oversees about $12 billion in muni bond funds. He's with us now live from Chicago. Paul, no relation, I should say, up at the top here, but happy to have Brennan on the show. Tell me, how much buying are we going to see for this $2 billion bond issue?
I think there'll be pretty good demand. The deal is already in a order period, and indications are that investors are placing orders in robust fashion.
Because we've had investors on this show who'd say they wouldn't put money to work in that particular state. They are concerned about the high debt levels there. They're concerned as well about perhaps defaults on debt. How real are those concerns?
Well, California is definitely facing budgetary stress. A lot of that's brought on because of the weak economic environment, as well as a political process that's a little bit dysfunctional. But the state is a sovereign entity. Debt service is constitutionally required as a second most priority item. There's ample resources there that pay the debt service, but obviously the state is experiencing a lot of stress on its budget. Liquidity is continuing to be in short supply for the state, and that's creating a lot of negative headlines. So that is requiring the state to borrow at higher yield premiums than they otherwise would have to.
Yeah, I mean, there's been tremendous appetite out there for investors who have been chasing yield and liking the tax-free paper here. But the question is now whether it's going to be as attractive. You've got competition out there, right, from Build America bonds and other opportunities right now. I mean, why can you make the argument? How are you making the argument that you do think that the appetite will stay as strong as it has been?
Well, you get for the state of California, it is the lowest rated state in the union, but also investors are getting rewarded for that fact. At least we think they are. The yield premium on the state is the widest for any state, so investors are getting paid pretty well if they're willing to take the risk and are willing to stomach fluctuations and volatility in the news and the circumstances surrounding the budget.
Okay, so you're finding still reason to buy there. Also, taxes having gone up probably will continue to go up there, right? That's the argument to continue buying. But tell me about the other factor in there, which is the question of supply. With the competition, as I mentioned, from Build America bonds, also some more interest perhaps in treasuries that we're seeing. I mean, what's your outlook there?
Well, the Build America program is definitely having an impact on the tax-exempt muni market. It definitely has reduced the supply that's available as borrowers are finding it in many cases advantageous to issue Build America bonds. And that has reduced the supply in the municipal market, but also has helped the performance of municipal bonds as demand remains strong. As you mentioned, the tax outlook is likely that investors are going to have higher marginal tax rates, and tax-exempt bonds will continue to be a very attractive investment for them. But again, on the supply side, we're seeing a reduction because of the Build America program. And if you're in the upper tax brackets, the after-tax advantages of tax-exempt bonds are still pretty favorable. So I think investors are still going to gravitate towards tax-exempt bonds at the current levels that we're seeing, at least.
Well, if the Obama administration does extend the BAB program, I mean, what are those going to look like? Are we going to see a change in the interest rate subsidy here?
Yeah, there's been a number of proposals in place. One of them is to lower the tax subsidy, but also broaden the amount, the borrowers who can actually access this program. So we could see greater expansion in that program going forward if it's passed. And
you don't think that's going to be disruptive?
Not disruptive necessarily. Okay. It's just going to change the landscape a little bit.
All right. Thank you so much for joining us here. It's Paul Brennan, Portfolio Manager at Nuveen Asset Management.